Hello viewers, in this video I'll be going over the S&P 500 ETF ticker symbol SPY. Today we are up 1.5% and we have about 2 hours left in trading on the 1 hour chart. On Wednesday we were oversold on the 1 hour RSI. We quickly found support at that moment and we proceeded to move on higher from negative MACD onto positive MACD. So on the 4 hour chart, we start to see a convergence on the MACD, but we're still negative. I do see us turning positive MACD later next week. And another concern that this downtrend may not be finished is we did not touch the oversold level on the RSI yet. Ideally, we want to touch it and have a higher MACD as well. Well, later we'll see on a daily chart. So what we have here, we found support on the 150-day moving average again, and that is a good support, but ideally we want to touch the 200-day moving average. So I do see that as a possible support if we do proceed to move down lower. And as for resistance, since we've been touching the 9-day moving average, and the next resistance above that is the 18-day moving average, and we need to touch that resistance and break out in the next coming days in order for this uptrend to stay intact. So if we were to move on higher, that price movement is roughly around 4.1%. And if we were to move down to the 200-day moving average, that is around 3.2% move down. So if we expand to the weekly chart, if we do manage to close this week in a candle-shaped candle or hammer-shaped candle, that is another indication that this uptrend is still intact as well. So again, the 200-day moving average that I previously drew on the daily chart also coincides with the 50-day or 50-week moving average, which is a really strong support. And ideally, if you want this uptrend to stay intact, we want to confirm that there is support and not panic mode. So ideally, we want to touch it and then quickly bounce off that and continue on with the uptrend. So let's head to the forecast model. So I'll go day by day where S&P 500 will head to in the next coming days. So we have 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So we have one forecast model to look at, and I'll prove why this forecast or this model is closely related to the current trend. We have the current trend right here, and below it is this trend that I believe is similar to the current trend, and this dates back to April 3rd, 2007 to June 28, 2007. So what we have in the beginning of the trend, we were below the middle Bollinger Band at this instance, and we proceeded to make an uptrend remaining above the middle Bollinger Band right at this point, and we lose steam to touch the bottom Bollinger Band at this instance, and another instance right towards the end where we got off both back in Thursday and Wednesday, and in between is an attempt to touch the middle Bollinger Band right here. So we have those points, and we start to see a similar pattern. We were touching or below the middle Bollinger Band at the beginning of the trend. We proceeded to move on higher in an uptrend right here, and then we quickly lost strength to touch the bottom Bollinger Band right there, and once more towards the end right here. And in between, we saw, in this case, we touched the middle Bollinger Band, and we have 1, 2, 3, 4, 5 points. 1, 2, 3, 4, 5 points. So there's reason to believe that the trends and patterns are the same. The outcome and forecast should be fairly the same. And the trend that we examine, again, April 3rd, 2007 to June 28th, 2007. And it looks like the S&P 500 was only up 34 or 35 basis points. So not much movement in the next coming days or in next week. So I do expect us to be at support, more likely to move slightly higher. So that is what I see in the forecast model. And if you enjoy this content, feel free to like, subscribe, comment, and thank you for watching.